Good evening, guys. Today we will be talking about accounting equation. An accounting equation, in terms of accounting, it is assets are equal to equity plus liability. Assets refer to the vehicle that the business use, whether to transport or whether to pack stuff, maybe to buy things and then transport it into the business. And also it refers to the machine, if it is a manufacturing company or a manufacturing business, the machines that are used in that business and the premises of the building of the business, which are buildings and the land that the business has. So those are assets of the business. And then equity are the injections that are made by the owners. When I say injection, I refer to finances that are put into the business by the owners. Okay. In terms of the company buys shares of the business. So it puts money so that the business can buy assets and also buy inventory, which is the stock that will be sold if the business is selling something, and also invest the money. Okay. And then there are also liabilities. Liabilities are the monies that are borrowed by the business. Okay, it can either be borrowed from the bank, which is loan, or the business can buy the premises by a mortgage bond. That is also a liability. Or it can also buy goods on credit, the stock that it is selling. So assets are equal to equity plus liabilities. The reason I'm saying that it is because when the owners invest their money in the business, the money is taken into the bank of the business. So the bank is an asset. Okay. So if we have owners that invest 20,000 rand into the business, then the bank will also increase by 20,000 rand. And bear in mind that the bank is an asset, meaning assets increase by 20,000 rand, and then equity also increase by 20,000 rand, and then our liabilities, let's say, is zero. We did not borrow any money, so assets are equal to 20, and equity plus liabilities is also equal to 20, and then that maintains our accounting equation, which says assets are equal to equity plus liabilities. Now let's say that the business buys a vehicle on credit, and the vehicle costs, let's say, 30,000 rand. A second-hand vehicle that costs 30,000 rand. So a vehicle is an asset in terms of accounting. So our liability is going to increase by 30,000 rand. Okay, because we have borrowed, we have bought something on credit. So that means the money that we owe to outsiders is equal to 30,000 rand. And then what we have bought on credit, it is an asset. That means our vehicles are going to increase by an asset with the value of 30,000 rand. So we will say that assets are equal to 30,000 rand, which is the vehicle is 30,000 rand, and then our liability is also 30,000 rand. So we take the 20,000 rand that was put into the bank, which is an asset, and then we add to the 30,000 rand, which is of the vehicle, and then we have assets of 50,000 rand. So we have equity of 20,000 rand, and then we have liability of 30,000 rand. So equity plus the liability gives us 50,000 rand, and then the bank, the money that is in the bank plus the value of the vehicle also gives us 50,000 rand, and then that maintains an accounting equation. So as time goes on, I am going to do for you guys some questions so that we can be able to understand like how this works. And as time goes on, it is going to become a little bit more complex, but as time goes on, you guys will understand. Thank you for your time. Please like, share, and subscribe to this video. Thank you.